If you started your investing journey today, how long might it take you to reach an average of £100 a month in dividend income? And if you reach that target, how long would it take you to reach the next milestone of £200 a month? Well, I've been investing for over 16 years and I can now reveal how long it's taken me to reach each £100 a month milestone from zero all the way up to an average of £1,500 a month, which I'm now receiving today. This is not investment advice and I'm just showing you my own journey. When I first began my dividend journey way back in 2009, we were still in the financial crisis. I made plenty of mistakes back then when I confused price with value. My first 3 purchases were in the banks, Lloyds, Barclays and RBS, as they looked cheap, but they were cheap for a reason. They were simply loaded to the brim with toxic assets and in some shape or form needed bailing out. And so began the wild swings in my portfolio day after day, which was not motivating at all. In fact, it was very scary indeed. Some of the other companies I owned at the time actually went bust, making the volatility even worse. However, just when I was thinking of giving it all up, I saw something which did motivate me, and that something was dividends. My first ever dividend was from Aviva, and I received it in the May of 2009. Unlike the share prices which constantly moved up and down, dividends were much more stable. When I calculated dividends received per month, it always seemed to be going up. Now I know that many will say that dividends mean nothing and it's a total return which matters. All I can say is that without dividends I would have lost interest in investing, given up and probably squandered the money instead. And my future self would probably have been very angry with me indeed. The actual value of the portfolio didn't seem to interest me at all. It was constantly soaring and crashing in those early years. 1 step forward followed by 2 steps back, but dividends, they just kept on rising. For me, nothing else seemed to matter. I soon became obsessed with working out my average dividends per month, and I recalculated it every time I received a new dividend. The simple equation I used was this: all dividends paid over the last 365 days divided by 12. To me, this was the most motivational equation I had ever seen, and so my investing journey began. In 2009, I bought shares in the 3 banks I've already mentioned, and also Aviva. I started with a lump sum of £5,000, which was my savings at the time, and then I proceeded to drip feed in spare money each month. I only started investing when I had become completely debt-free, and this gave me more money to invest each month. My initial plan was to invest between £500 and £1,000 each month, but this varied a lot from month to month. As time went by and my wages increased, I could put a bit more in. I was never a high earner and have a very ordinary job in the education sector, but I was consistent and I just love seeing my dividend totals increase. In 2010, I added a couple of mining companies to my portfolio. 2011 saw the purchase of an LED lighting company, the house builder Persimmon, National Grid, BP and AstraZeneca. My platform at the time did not allow me to buy individual overseas shares, and I had not even heard about index tracking ETFs until many years later, so I grew accustomed to buying UK large cap companies with familiar names. During 2011, I managed to reach an average of £100 a month in dividends. That took around 2 years and 7 months from when I started, and it meant a lot to me to finally reach this target. So I decided to have a little celebration just for motivational purposes, something I still do whenever I reach my next £100 increment. And what better way than to go to McDonald's for a tasty burger? This is not nutritional advice and your cholesterol levels are at risk. Please do your own research. Cheers buddy, here's to the next £100 milestone. In 2012 I added Shell, Tesco, Vodafone and GSK. 2013 I bought United Utilities, SSE, Direct Line Group, BAE Systems and Centrica. In the March of that year, I reached my next milestone of £200 a month in dividends, and you guessed it, another feast at McDonald's to celebrate. That took another 1.5 years to reach the £200 level. onwards and upwards. It was around this time I noticed dividend payments per company increased somewhat, especially in the financial sector as it slowly recovered from the banking crisis. In 2014, I added Imperial Brands, Unilever and British American Tobacco to the team to produce even more dividends. And in the August of 2014, my average dividends per month had risen to £500. It seemed that my dividends were going exponential, and with the trips to McDonald's now becoming more regular, so too was my waistline. But onwards we go. 2015 saw the addition of HSBC and Sainsbury's. I made good use, of course, of a stocks and shares ISA, so all my dividends were tax-free, and I reinvested the dividends back in to grow the snowball even faster. In 2016, I bought the miner Rio Tinto, the pub chain Marsden's and Royal Mail. They all started working for me too, producing even more dividends. In the middle of 2016, I had surpassed an average of £700 a month in dividends. In 2017, I added Greencoat Wind Energy, the water company Pennon Group and the renewables infrastructure group to the team. In 2018, no new companies were added. I simply put spare money into companies I already owned, and in July of that year, I reached £900 a month in dividends. 2019 saw the purchase of Diageo, Bluefield Solar, and for the very first time, an exchange-traded fund, which tracks the entire FTSE 100, and it was in the October of that year when I finally reached an average of £1,000 in dividends per month. And this took around 10 years from when I started my journey. Even if I lost my job, I'd still have £1,000 coming in per month without having to do anything. This was incredibly motivational. However, what was about to happen next, nobody could have predicted. Before I continue, if you are enjoying this video, then please hit the like button as it really helps out the channel, and why not subscribe so you'll be notified when I release future videos. In 2020, I bought the S&P 500 for the very first time using a low-cost index tracking ETF. This isn't a high dividend payer, but it did help with diversification. In 2020, of course, we were hit with the global pandemic, and the first time my average dividends fell as many companies lowered or even stopped paying dividends completely. By mid-2020, we had dropped back to £900 a month. And by 2021 it fell even more and dropped below £800 a month. I kept buying, however. This time I added Tate & Lyle and IG Group to the mix. In 2022 I bought Croda and VHYL, which gave me exposure to thousands of companies around the world which pay higher dividends. As we came out of the pandemic, my dividend payments started to recover, and by this time we were back up to £1,000 a month. And by mid-2022, I had reached £1,100 a month. 2023 saw the addition of Halion to the portfolio, and in the middle of that year, I was touching £1,300 a month. By 2024, I was filling the ISA each year, and so had to look for a few companies which paid lower dividends to keep outside. That year saw the purchase of the London Stock Exchange Group, RELX, Experian and the ETFs VEVE and VWRL for more diversification. By November of 2024, I was up to an average of £1,400 in dividends per month. And at the time of this video, I've crossed the £1,500 mark, and it's taken me around 16.5 years. My ultimate aim would be to continue to see if my dividends per month could one day exceed the wages of my day job. I'm not sure I'll achieve this, but it's something to aim for at least. Passive income does give you options, however, to perhaps go part-time, give up some work responsibilities, or even to retire early if you wish to. It's good to have options. Now, although I find dividend investing very motivating, the average yield of my portfolio is not actually that high and is currently just 2.9% at the time of this video. There is also capital growth on top, which makes up the bulk of my total return. Since 2009, the money I've drip-fed into the portfolio from my wages is $299k. The value today is $647k. Giving me a net gain of $348k, or a return on investment of 116%. Many investors will of course have done much better than this, and I have already explained I was restricted to what I could buy, and I made plenty of mistakes, especially in the early days when I was learning. My results include everything. If you want to take the first steps in investing and start your own portfolio like I have, then Trading 212 will give you a free fractional share worth up to £100 if you sign up using the link in the video description. Compounding needs as much time as it can get, so the sooner you start the process, the better. Let me know in the comments how your own dividend journey is going. See you next time, and happy investing.